Imagine having the money up front to where you can kind of bully your way and get a deal versus a syndication. If you find a deal, then you have to go raise the money all of a sudden, right? Versus the fund, we already have the money right up front and we can kind of negotiate from that.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello, and how's it going? My name is Travis Shelton, and welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate. We keep these fun and full of value. I'm really looking forward to a great conversation today with my guest, Alex Sabio, a married father of 4 from Southern California. He's a real estate investor, short-term rental operator, fund manager, and best-selling author. Alex, thank you so much for joining me today.
Travis, thanks for having me on. You make me sound better than what I always feel like I am. So thanks.
No, man. You're big time. We met each other a long time ago at an event, and always been able to keep in touch. And you've always provided a ton of value to myself and my wife through some of our short-term rental excursions. But can you maybe share with the audience a little bit more about yourself and your real estate focus?
Yeah, so Travis, thanks for that warm intro. So I'm actually in healthcare. I have a W-2 and invest in real estate, right? I actually work full-time still, but I'm financially free because of real estate. But I started investing early to mid 2000s. And I made every single mistake in the book, man. I mean, I wish I was like the gurus who went from, who's 20 years old, went from 0 to 100 units in like 8 months. But that's really not my story at all. A lot of bumps and bruises along the way, but I had to go through those lessons to get to where I am now. Had a bunch of single family homes. Those didn't work out that well. And eventually wanted to scale my portfolio and somehow landed onto short-term rentals. And that was my bread and butter. That was my wheelhouse. I really enjoyed it. And I landed on that in like right around the pandemic, right? When short-term rentals were booming. But as being in healthcare, I saw a lot of my healthcare workers just burnt out. And I can tell you they were burnt out before COVID, and COVID put it on steroids.
For sure.
And so they saw me like just enjoying financial freedom through investing with short-term rentals, and they kind of to want to learn what I was doing. And I just been snowballing all my profits, acquiring more and more short-term rentals, and helping other healthcare workers start their own business too.
Oh, that's wonderful. And I love your story, and I love that you're always giving back on social media and to people around you and the community that you've been able to build out there. We always start our podcast with some motivation. What's the motivational quote you'd like to share with the audience?
So with me, my high school coach told me this. I was like the shortest basketball player on the team, and I sucked, right? But for some reason, there's all of these quotes that someone tells you, and for some reason it sticks. And he told me, the harder we work, the luckier we get. Because I always wanted to be lucky, but it was like it just was never in my cards, right? But I realized that sometimes I don't know the path, right? And so I just keep working on something, and I just keep working my butt off, and somehow I get lucky and fall into something. So
yeah, it's amazing how when you work really hard, you end up a little bit luckier, right? Like you mentioned, you're working a W-2, you're doing the real estate, you're doing all these things, and eventually you found financial freedom. A lot of people I know aren't willing to work that W-2 full time and invest in real estate or do anything else on the side. It's like they only want to work their W-2, and hey, at the end of the day, my retirement will take care of me, or my employer will take care of me, right?
Right.
We all know that's not really the case, but they don't want to work hard for it,
Right. Yeah, and I think it's so easy. We all do this as healthcare workers. What do we do when something big comes up? Let's say we have a cruise, vacation, birthday. We say, "Oh, I need $1,000. Oh, that's one extra overtime shift. That's easy.
Yep.
I'll take care of it, right?" So why on earth would I try to save up $20,000 for a single family home just to profit $200-$300 a month? when I can
Yep.
easily just pick up an overtime shift. And most of us don't want to put in the work,
No, totally true. I mean, I know that's how I grew up, was like, hey, if I want this, it's this many extra shifts.
Hmm.
So great point. Kind of transitioning into our main topic now, Alex, how can you help our audience of real estate investors?
I think with me is I bring a unique perspective in a sense that I still work, right? There's a lot of
Yeah.
other people that I think people feel like they can't accomplish stuff while they're working at the same time. And I'm living
Hmm.
proof that I'm doing that. And, during the pandemic, I was working 60, 80 hours a week and still growing my short term rental business. Now, the one thing is that short term rentals have is that they have amazing tax breaks
Hmm.
and benefits. So, I was working all those hours pretty much exempt because I wasn't paying any taxes on that. And my wife was able to retire from her W-2 job.
It's
And I
amazing.
know a lot of families out there, a lot of healthcare workers where the mom and dad are working. And so my wife was able to retire. Remember, during the pandemic, a lot of our kids had to stay home and it sucked.
Hmm.
And they had to homeschool, and we just couldn't go through that. And I said, you know what? Why don't you just go ahead and retire? I'll work full time. But even working full time, it doesn't have to be perfect. Like I said, the harder you work, the luckier you get. There's all of these systems in place that you can work through to make it easier for you. So you could definitely still work and scale your business at the same time. I'm really close to walking away. I'm cheap as hell. So any of you watching out there, you guys have to know I'm really cheap. And so I have this nice six-figure salary that I'm really good at, that I enjoy working. So you don't have to walk away from your W-2 job if you don't want to. You could
Sure.
still work if you enjoy doing it.
Yeah, and I think that the blessing with being financially free is you have that option, right? You can go to PRN, you can go to part time, you have multiple options, and some people do. They love to stay working in the job that they have, but not necessarily have those golden handcuffs, and can kind of make more decisions based on what they truly want than what they have to have with holding on to that W-2.
Right. Yep.
Um, so I wanted to dive a little deeper. We originally met at a multifamily conference, right? And so why and what was it about short-term rentals that really kind of said, hey, I'm going to pivot, focus all on this. I'm going to sell these other long-term rentals, and I'm going to kind of go 100% all into the short-term rental game.
Well, going back, the harder you work, the luckier you get. I never thought I would get into short-term rentals at all. It
Hmm.
wasn't on the radar 4 years ago. No, I wasn't even thinking about it. If you told me I'd own a home in Eastern Tennessee or in a beach in Alabama, I'm like, I don't even know where those places are, right? And so I
Yeah.
kind of fell on that. Having a multifamily background is actually really good because you learn to underwrite your deals
Hmm.
conservatively, and you learn these pro formas. And then I started to learn about taxes and cost segregation with these larger buildings. And not a lot of people were doing that with short term rentals because at the time houses were still like, you know, being sold at $400,000 or $500,000, and it didn't really, you couldn't really take advantage of a cost segregation when you were doing something that small. But then the prices started going up six, seven, $800,000, and I remember contacting someone, a cost segregation expert, like, can I do this with a short term rental? I mean, I almost bought $1 million multifamily asset, and this is just a couple $100,000 cheaper. And he
Yeah.
said, "Oh yeah, and there's this crazy loophole that's associated with it." And so when I started trying to get into multifamily, when you're brand new, nobody wants to speak to you. I mean, that's just
Absolutely.
the
Yeah.
that's just the truth. You have to somehow make your way in there. And I remember I remember thinking to myself, I have a lot to offer, but nobody really wants to speak to me. But
Yeah.
I started providing tons of value to people, and the more people I talked to, the more I got all these different stories. And I remember talking to an investor, and she said, "Why on earth would I invest in an apartment complex when I'm making $24,000 a month on my 3 Airbnbs?" And I said, "Well, Teresa, you're probably making 24,000, but you probably have a lot of expenses, mortgage, etc., yada yada." And she
Hmm.
said, "No, you're not listening to me. That's my profit." And then I said, okay, what are you talking about now?
Yeah,
You
yeah. You
got my
teach
ear
me.
now. You teach me, right? And so I kind of took her advice and I kind of just ran with it. And at the time, it was summer of 2020. Flights were getting canceled left and right, and I couldn't
Mhm.
go and see all these different apartments that I wanted to in Kentucky. Like we plotted the map and kind of targeted this area where we wanted to invest in multifamily, and it just didn't work out. I mean, I really tried hard and it just wasn't work out. And I felt stagnant. And I hate seeing money in the bank. And I had some money in the bank. And I said, I just got to invest it. And I did my due diligence and I said, wait, the numbers on this short term rental are going to be way better than
Mhm.
some of these apartment complexes that we were looking at. So I dove all in and I'm happy that I did so.
So briefly for the audience, like how quickly from that first deal, I know you've kind of you grew your portfolio pretty quickly, and
Mhm.
not only in Tennessee, but like you said, Alabama, and you're looking at other markets now. But maybe real quickly, like kind of walk through how you went from one to kind of how you scaled and how quickly you did it.
Well, I did. I did. I was a little lucky in the sense that I had a lot of long-term rentals at the same time, and so
Hmm.
there was some equity in those. I bought those, like I said, early to mid 2000s, and they were like breaking even, but they were slowly building up equity, and then tenants were slowly paying them down. And so the first short-term rental we had, I still remember it because it's almost 3 years ago today. Um, we accidentally went live on the wrong date, and the first guest booked 2 weeks earlier than we should have, and they booked $500 a night times 4 nights. I'm like, whoa, that's $2,000, and our mortgage is like $2,600. What the hell's going on here, right?
Yeah.
And then we're like, oh, maybe it's a fluke. Then all of a sudden, like maybe a few hours later, another guest book, same price, and then another guest books, and another guest books, and we're like, holy crap, there's something to this here.
Yeah.
And then you start thinking, you're like, hey, I have $100,000 of equity in this one property out there in Houston, Texas, that's profiting me $100 a month. If I sold that 1031, exchange it into another one of these assets, because at that time our first property was generating about $5,000 a month net profit, right?
Wow.
after
Yeah.
after mortgage, everything. And we said we just got to do whatever we can to get as many of these as possible. And so
Yep.
we kind of went through that slow process of selling off homes and then 1031 exchanging them up to short-term rentals. So right away we knew we had to buy one, and I think we get the second one. It was a brand new build, so it took a little bit longer than expected. So it
Hmm.
was like the second one was about 7 months, and then that one profits still today over $5,000 a month, but it's in its heyday it was profiting about $7,000 a month
Wow.
on average. Yeah.
It's amazing. And then I guess for those out there, I mean, do you recommend, and I know it's kind of a different world right now, especially, from when you were buying, the new builds, but from an older build or like to renovate a property into a short-term rental or buying a home, as a, kind of turnkey short-term rental, what are
Yeah.
maybe some of the pros or cons or some of the things that really led you down that kind of new home build path?
For me, is because to be honest with you, I was a scared little baby, and that's really what it was. I said, "This home is 2,000 miles away. I'm going to be
Hmm.
self managing it, and I don't want to be dealing with stuff that's going to break or whatever it is, right?"
Yeah.
And so I felt more comfortable going with a brand new build. It was under warranty, like the beds were brand new, linens, everything in there was brand new. I was the first one to use it, and so I felt more comfortable going new. Um, and then I created a relationship with the agent who had a great relationship with the builder. So I kind of kept going back to that same builder. But not only that, there's the time velocity of money. Now, I've
Hmm.
bought older short term rentals and have had to fix them up. And you're talking like it took me like 5, 6 months,
Yeah.
close to $50,000 out of pocket versus. Like I said, I went on the market 2 weeks earlier than I should have and started making money right away.
Yep.
So the thing is with me, I was trying to build up as much cash flow as possible, so I wanted it brand new. I didn't want to start like fixing stuff up.
No, I love it. It's smart. I don't think a lot of people are out there thinking about, hey, how can I turn this new build into a short term rental? I don't see it out there as frequently, but different markets, that Tennessee and Gatlinburg and all that area
Mm,
is a different, very unique beast in the short-term rental game.
right.
Um, and so now as you're transitioning and you've done some of your own short-term rentals, talk to me a little bit about what you're doing now with being a fund manager and what your big focus is there with Welcome Capital.
Yeah, like I said, I never thought I'd be in Eastern Tennessee, the beaches of Alabama, and now I own a hotel in Northwest Arkansas. Like it's just so random to me to think, right?
Yeah.
Um, but at a certain point, you just start networking and
Hmm.
meeting as many investors as possible. And so I created like a lot of good relationships with a lot of different investors, and some people wanted to team up, and
Hmm.
that's what I did. I teamed up with other investors, and a couple investors really knew this market in Northwest Arkansas. In fact, they lived there. They liked it so much they moved from Austin to Northwest Arkansas.
Wow.
And 2 months ago, we purchased our first hotel. It's a 76 unit hotel. We got it under contract for $3.6 million, and it appraised for $6.5 million, right? Three
Yeah.
million bucks right out of the bat in equity, and that's a new venture for me. It's really exciting. The thing is, we started teaming up with people, and it's completely different than short-term rentals. I mean, everyone kind of has their different roles.
Yeah.
The cool thing is, I don't have the operations part of it because if any of you have short-term rentals, the pain in the butt out there is operations. Like guests are asking
Yes.
what the Wi-Fi password is. Hey, you know what? I just checked in and the place isn't clean, and your cleaner didn't show up or something like that.
Hmm.
I don't have to deal with any of that working as a team. Like everyone kind of splits into their role, whether it's fundraising, deal finding, or operations. We have an
Yeah.
amazing operator. I'm not trying to step on his toes. He does really good job on his thing, but he doesn't do any fundraising, and so I
Okay.
do some of the fundraising.
Okay.
I'm not good at finding deals or negotiating contracts. We have somebody that does that. So it's really cool dynamic to work in that team dynamic. So that's kind of what we're doing now. We're buying hotels and different short-term rentals because it's a lot of hotel and short-term rental operators that are kind of joining forces because we think there's going to be a lot of good deals to be had here soon. So
Sure, absolutely. And it's awesome that I think you recognize, what one of your strengths were, it's like, hey, I'm good at, social media and I have a good following
yes,
and I can raise capital and that's what that team needs. But tell me, help our audience a little bit with, what is a fund as opposed to maybe a syndication? I think most people
yeah,
out there recognize what a syndication is. So
right.
what's the difference between investing in maybe your 76 unit as it maybe if it was a
Right.
syndication opportunity or if it was maybe in your fund.
Yeah, so I've invested passively in syndications as well.
Hmm.
Pros and cons to either one. The pros with the syndication, you know the deal. You're
Yeah.
like, hey, this is 123 Main Street. It's 100 units. It's very easy to sell that. Like the rents
Hmm.
are $600. We're gonna bump it up to $1,000 because the market commands that. Really easy, get the deal done.
Yeah.
Um, and with a fund, it's very diversified where there's many assets in the fund. And so someone can invest with me, let's say $100,000. I take that $100,000. Let's say there's, I don't know, 20 people that invest $100,000. Uh, they don't know what the property is yet,
Yeah.
right? They're basing on whether they like you or not, or whether your past performances are, and what your
Hmm.
business plan is.
Yeah.
And so, what I do is I'll go and locate and find the properties to fill this buy box. Like I said, I think right now, if we had the money, we can go in there. Imagine having a wave of foreclosures, which everyone was
Yeah.
kind of expecting, but just isn't really happening. But imagine having the money up front to where you can kind of bully your way and get a deal versus a
Sure.
syndication. If you find a deal, then you have to go raise the money all of a sudden,
Yeah.
right? Versus the fund, we already have the money right up front and we can kind of negotiate from that.
So you're just in a little bit stronger of a buyer position. You're also a little bit more diversified within the
Yes.
portfolio because that 100,000 is not necessarily in that one deal, but it's going to be
Yes.
spread basically across all the deals that you ultimately raise money for and put into that
Yes.
fund.
Yes, yes, exactly. Like it might be seven, eight hotels, right? But
Hmm.
if you're the type of person that wants to know the exact properties, it might not be the best thing for you. If you are the type of person that trusts the person, like, hey, they have a really strong record, or we have a really good relationship, and I see what he does, everything he touches is magic, and whatever he wants it, he gets into, I want to get into that, or she gets into, then that's for you.
Yeah, definitely agree. I think that due diligence on the fund manager and their track record is especially important, more so than maybe just a one syndication deal where you go, hey, that's a home run, and you can identify it as a fund manager going into a fund. You really have to have that confidence in the managers that they're going to be able to continue to find deals and they have the right team. So, and now your fund is all exclusively to hospitality focus, right? Short-term rentals and kind of that niche.
Yes, it's what we like. It's what we like doing. It's what we've been talking about for the last 2, 3 years. Like, hey, you should consider hospitality versus long-term rentals because it's generating more income, and so that's kind of why uh, that's our lane, right? There's
Yeah.
definitely different funds that there's some funds of funds. There's some
Yep.
like self storage, like all of these different niches, but we want to stay in what we like doing and what we feel passionate about. So
Oh, that's wonderful. And I guess, just for the audience, some background. Is it accredited investors only into your fund?
yes, yes,
Okay.
accredited investors. We're a 506c. That's why you see me on social media all the time talking about this stuff. So, but follow me on social media and check out my, all my deals. So.
Definitely. We'll definitely drop all your social stuff in our show notes. And definitely, if you're out there and interested in funds or short term rentals or have your own short term rentals, Alex is a great follow and provides so much free content and value.
Mm.
Believe me, it'll be worth it to drop a follow, and I highly recommend that. Well, Alex, are you ready for the hot seat?
I guess so, man. Let's go. Let's
All
go.
right. We ask all our guests the same final four hot questions. And so, number one, Alex, what is one book you'd recommend to someone wanting to know more about real estate investing?
With me, I don't really read real estate books. I kind of get bored with them. A lot
Okay.
of times with me, it's motivational books, and so I would have to say David Goggins' "Can't Hurt Me" is like hands down the best book for me. I tend to read that or listen to it, like probably every 6 to 8 months or so,
Nice.
because then it gets me in the right mindset. Anyway, "Can't Hurt
No,
Me,"
I love
David
it. Yeah,
Goggins.
no,
That's it.
that's the mindset is huge, right? Like I have a ton of those books I have to listen to regularly. So I love that recommendation.
Yeah.
What's your favorite productivity tip or trick? Maybe a tool or an app that helps you get done more, right? You work full time, you're doing all this real estate on the side. What's your secret?
I'm gonna give you something different than most people.
Okay.
Should sorry. Uh, Man, hey, check this out. This is a stream deck right here. And so I have all my buttons right here. And so if I want to go on Facebook, I click on that and all of these other websites. Anyway, it's almost like having just hotkeys
Okay.
versus like having all of these different tabs. I always
Oh, I love
recommend
it.
that to people. I know a lot of people have different apps. Most people don't bring that up. Some people use it for like music because then they could easily edit stuff and
Yeah.
or editing video. I like to have all of my tabs and like I could have let's say I pull up my first short term rental and have a tab for every single one and then I could just click on it. Anyway, Stream Deck, you could get one at Best Buy.
Stream Deck. Yeah, never heard of it, but definitely gonna look into that. That looks pretty sweet.
Yeah.
What's your biggest real estate mistake or failure, and what did you learn from that experience?
Okay, so the first ever real estate deal I did was a scam,
Oh
and
wow.
I got scammed out of $16,000 right off the
Oh
bat.
my gosh.
Right, and it was painful lesson. My wife should have pumped the brakes and said, "You're awful investor. We're not doing this anymore." Right, but something inside her told me. It was a group called Mile High Capital Group in Denver. I actually flew there, visited the site. He was going to build duplexes everywhere in this community for
Yeah.
$320,000. I put 5% down. I get a phone call a month later, said, hey, this guy's going to jail because he ran a Ponzi scheme and he didn't own any of the land. And he was selling to, like, he had this one plot of land that he was showing the investors which he owned, but he was selling like all of the other stuff to investors. Anyway, I think I saw like
Oh
maybe
my.
$1,000 back. Imagine how much money I would have generated if I invested $15,000 $16,000 into Amazon or something,
Yeah.
almost 20 years ago, and just left it. But it is what it is.
Yeah.
You're never going to be perfect. You're never going to hit a home run. Even in base hits, sometimes you might strike out. But I think real estate's a long game, and if you keep going, you're going to be okay.
Yeah.
What I learned from it, I the person that brought me the deal was someone I was working with at the time,
Mm-hmm.
and what she was talking about sounded so great, and I just said, okay, I want in on that. And I
Yeah.
did the due diligence. I flew there and everything. But really, if I had to do it again, I would have networked my butt off as much as possible.
Mm.
Because what you'll find is you don't need to jump on the first thing you see. Because all of a sudden, someone will bring up to you, hey, I'm making $24,000 a month on 3 Airbnbs. And you're like, I'm so glad I ran into you. So, really,
Yeah.
what I learned is just network your butt off and you'll find something there for you.
I love it, man. What a tough story, but ultimately, I love the fact that you stayed with it and you kept investing. And
Yeah.
a lot of people I think would have quit after that and said, "Oh, this is all real estate's a scam. These guys, this
Yeah.
and that." But I love that you stayed true and kept looking for great opportunities and ultimately, found what you do wonderful.
Right.
And
Thanks.
finally, if you could be remembered for one thing, what would it be?
Someone that number one, it's hopefully the legacy is with my kids, and hopefully they do something amazing. If they not, it's cool too. But I've always helped people, and I think it was because when I was trying to syndicate apartments, I didn't really have any like experience or anything that I could give them.
Mm-hmm.
The only thing I could do is just help them as much as possible. I didn't have any deals. So it was like, hey, you need a realtor in this area? I got somebody. You need a lender? I got someone. You need me to do something? I got something. And so eventually it got to the point where I was just on this kick where I was just helping as many people without ever expecting anything in return.
Yeah.
And so I think if I ever help anyone with short term rentals or hotels, I always tell them two things. I say, hey, I never expect anything in return. But if you ever get a deal, do me two things. Give me a shout out. Give me a text. Say, hey, Alex, I just bought my first short term rental because of you, because your story was inspiring. Or shoot me out on social media like, hey, this dude, Alex, helped me out.
Yeah.
And then the second thing I want people to do is take someone else along with them.
Yeah.
Take someone else along with them, help someone else out, because we were all new at one point, right?
Mm-hmm.
And for some reason, someone told me about short-term rentals and completely changed my life. So
No, it's a great story, and I mean, obviously, we're called the Hot Real Estate Investing Podcast, but it stands for helping others through real estate investing. And as healthcare professionals, both of us, I think that helping others is a huge part of all of this. And I love that you always are willing to help other people. A lot of people don't know when I started my first short-term rental, Alex shared with me a lot of his quick messages and quick
mhm.
replies. And just out of the blue was so helpful and willing, and didn't say, hey, this is $1,000, or hey, or expected anything else. He literally asked me that same thing, like, help somebody else along the way. And I always really appreciate that about you, man. And always know you're someone that I can reach out to and ask questions, and you're always willing to help everybody out there. So the best place for the Hot REI community to connect with Alex is at www.thewelcomefund.com. On Facebook, search Alex Sabio, and at Instagram, the real Alex Sabio. And we'll include all those notes, or all those links in our show notes. Thank you, Alex, so much, dude. I really appreciate your time today and joining the podcast. And I think, our audience is going to learn a ton, and love hearing your story, man. It's a lot of fun.
Cool. Thanks, guys.
Yeah. So thank you for tuning in today, and commit to taking action today to move your investing forward. Take care and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.